When it comes to trading, everyone wants to master the market, to decode patterns, predict movements, and time the perfect entry. But here's the truth most traders overlook. The market isn't something you conquer. It's something you learn to coexist with. The real battle isn't on the chart. It's in your own mind. You don't lose to the market. You lose to your reactions, your impulses, your fears. Master the mind, and the market starts to make sense in ways data alone never could. Think about it. Every decision you make, when to enter, when to exit, how much to risk, is filtered through your emotions. You can have the best strategy in the world, but if you can't execute it with discipline, it's worthless. Most traders fail not because they lack knowledge, but because they can't control themselves. The charts trigger fear when prices drop and greed when they rise. And in that emotional swing, logic evaporates. Suddenly, you're not trading your plan, you're reacting to your feelings. That's why two traders can look at the same chart and see entirely different things. One sees opportunity, the other sees danger. The difference isn't in the data, it's in their psychology. To master your mind is to cultivate awareness, the ability to observe your own thoughts without becoming trapped in them. When a trade goes against you, do you panic or do you pause? Do you immediately feel the need to make it back, or can you detach, breathe, and reassess? Awareness is your first weapon. Without it, you're just a puppet pulled by the strings of emotion. With it, you begin to regain control, not of the market, but of yourself. The irony is that most people come to trading seeking freedom, financial independence, time freedom, a life on their own terms. Yet they end up becoming slaves to their emotions. The screen becomes a mirror reflecting every insecurity, every impatience, every hidden desire for control. The more they chase the market, the more the market runs away. But when you stop chasing and start observing, when you trade from a calm, grounded state, the chaos starts to fade. You begin to see patterns not just in price action, but in your own behavior. You start to understand that trading isn't about predicting the future. It's about managing yourself in the present. Psychologically, the market is a test of identity. It strips away pretense. You can't fake patience or discipline or confidence here. If you're impulsive, the market will expose it. If you're greedy, it will punish it. If you're afraid, it will amplify that fear until you either quit or learn. In that way, trading is more than a career. It's a mirror for personal growth. Every loss is a lesson in humility. Every gain a test of ego. The moment you start believing you've figured it out, the market humbles you again. And this is where the philosophical depth of trading lies. The market doesn't care about you. It's not your enemy or your friend. It simply is. Neutral, indifferent, ever changing. The only constant is you, the observer. When you accept that, you stop trying to control what you can't. And you start mastering what you can, your reactions, your patience, your emotional state. That's the true freedom trading offers, not the illusion of control, but the mastery of self. You begin to see that detachment isn't apathy, it's clarity. When you detach from the outcome, you think clearly. You stop needing every trade to be a winner. You start focusing on process instead of results. Ironically, that's when consistency begins to appear. The less you need the market to behave a certain way, the more effectively you can respond to whatever it does. The more detached you are from individual trades, the more deeply connected you become to the flow of the market itself. This is what separates the emotional trader from the professional. The emotional trader rides the highs and lows like a roller coaster, exhausted and reactive. The professional remains steady, focused, calm, almost indifferent to the chaos around them. They've learned that success in trading, like in life, comes not from control, but from composure. So the first rule, the foundation upon which all others stand, is this: master the mind before the market. If you can't control your emotions, the market will control you. If you can't stay calm in uncertainty, you'll never last long enough to find clarity. But once you learn to quiet the noise within, the charts start to speak in a new language, one of patience, logic, probability. And in that stillness, real mastery begins. Because in trading, as in life, the most powerful move you can ever make is to stay centered when everything around you isn't. Discipline is the invisible edge that separates the ordinary trader from the extraordinary one. It's not flashy, it's not exciting. In fact, it's often boring, but it's the single trait that sustains success in the long run. You can have all the market knowledge, the best strategies, the fastest execution tools, and still fail if you can't follow your own rules. Because trading at its core isn't about prediction, it's about precision. And precision demands discipline. Most traders don't lose because they lack information. They lose because they lack consistency. They jump from one strategy to another, chasing what worked for someone else, never staying long enough to master their own method. Discipline means resisting that temptation. It means saying no, not just to bad trades, but to your own impulses. Every trade you don't take matters as much as the ones you do. The disciplined trader understands that trading isn't about action. It's about alignment, aligning your behavior with your plan, your decisions with your long-term goals. Discipline starts before you open a single chart. It begins with preparation. Do you have a plan, or are you just reacting to price? Do you know your entry, your exit, your risk limit before you click buy? The undisciplined trader acts first and thinks later. The disciplined trader reverses that order. Every move is intentional, every risk measured, every decision backed by logic, not emotion. But discipline isn't just about rules. It's about self-respect. When you create a trading plan, you're making a promise to yourself. Every time you break that plan, you weaken your own trust. That's why it's not the market that breaks most traders. It's the erosion of self-trust that happens when they can't keep their own word. When you tell yourself you'll take profit at a certain level and then move your target out of greed, you're not just changing a number, you're teaching your mind that your rules don't matter. Over time, that inconsistency becomes your downfall. The bivandry of traders who succeed aren't superhuman. They're simply consistent. They've trained themselves to act the same way under pressure as they do in calm. When they win, they don't get euphoric. When they lose, they don't spiral. They've learned to stay steady because they understand that the market doesn't reward excitement. It rewards discipline. And that discipline isn't something you're born with. It's something you build, one decision at a time. Think of trading as a form of mental conditioning. Every time you follow your plan, you strengthen that muscle. Every time you break it, you weaken it. That's why consistency isn't just a trading principle. It's a psychological discipline. Over time, your habits define your identity as a trader. The more you practice discipline, the more natural it becomes. The less you rely on emotion, the more you rely on process. And that shift from emotion to process is what transforms trading from a gamble into a profession. The paradox is that discipline feels restrictive, but it's actually liberating. When you have clear rules, you free yourself from confusion and chaos. You no longer waste energy debating every move because the plan decides for you. The structure gives you freedom, the freedom to think clearly, to trade without fear, to stay objective, even when the market isn't. That's the secret most traders never discover. Discipline isn't about limitation. It's about control, not control over the market, but control over yourself. There's a saying, amateurs want to be right, professionals want to make money. The difference lies in discipline. The amateur argues with the market, clings to losing trades, and doubles down out of pride. The professional accepts losses quickly, moves on, and follows their plan without hesitation. They understand that success isn't about perfection. It's about consistency over time. If you want to rise into that top 500 of traders, you don't need more indicators or complex theories. You need clarity, patience, and repetition. You need to show up every day with the same commitment, the same focus, the same respect for your process, especially when you don't feel like it. Because the real growth happens on the days you choose discipline over impulse. In the end, trading discipline is more than a habit. It's a philosophy. It's about mastering your behavior in an environment designed to exploit your weaknesses. The disciplined trader doesn't just survive volatility. They thrive in it because they know who they are and what they stand for. And once you reach that level of control, once your decisions are no longer driven by emotion, but by intention, you stop being a trader chasing the market. You become the kind of trader the market can't break. Now, because discipline isn't the restriction of freedom, it's the foundation of it. Risk management, the phrase alone sounds dull to most traders, but it's the single concept that decides who survives and who disappears. It's not glamorous, it's not adrenaline-fueled, but it's the backbone of every successful trading career. While most people chase the next winning strategy, professional traders know that survival comes first, profit second. You can't win tomorrow if you blow up your account today. The first rule of trading isn't to make money, it's to protect the money you already have. Every trade you take is a probability, not a promise. Yet most traders approach the market as if certainty exists, as if they can outsmart randomness. Risk management begins the moment you let go of that illusion. You're not here to predict. You're here to manage uncertainty. That shift in mindset is everything. When you stop asking, will this trade work? And start asking, what happens if it doesn't? You start thinking like a professional. Good risk management isn't about avoiding losses. It's about controlling them. Losses are part of the business. They're the cost of participation. What ruins traders isn't losing. It's losing without limits. The amateur refuses to accept small losses, hoping the market will turn in their favor. The professional cuts quickly, cleanly, and moves on. Because every great trader knows small losses are tuition, big losses are eviction. And let's be clear, risk management isn't just about setting stop losses. It's about designing a system that keeps your emotions in check, even when the market tests your patience. It's deciding in advance how much you're willing to lose before you ever open a position. It's understanding that no single trade should ever have the power to destroy you. The goal isn't to win every trade. The goal is to stay in the game long enough for probability to work in your favor. When you trade without proper risk control, you're not investing, you're gambling with your future. The difference between the two lies in one thing: preparation. The disciplined trader sizes every position based on risk, not emotion. They know exactly how much of their capital is on the line, and they accept that risk fully. They don't double down out of frustration or revenge. They don't move stops to give it more room, because they understand that control isn't found in the market, it's found in their own structure. Think of risk management as emotional armor. It protects you from yourself. When you have clear rules about how much you can lose, you take pressure off your decisions. Suddenly, every trade doesn't carry the weight of your identity or your self-worth. You can analyze the market with clarity because your survival no longer depends on the outcome of one position. The trader without risk management lives in constant fear. fear of loss, fear of missing out, fear of being wrong. The trader with risk management trades with peace because they've already accepted every possible outcome. Philosophically, risk management is an act of humility. It's the admission that you're not in control of the market, that uncertainty will always exist. And yet, it's also an act of strength because you're choosing to control the one thing that's within your power, your exposure. Most traders lose because they try to control what they can't. The best traders win because they control what they can. That's the difference between chaos and discipline, between gambling and mastery. Even the world's greatest traders lose trades every single week. What keeps them successful isn't perfect prediction. It's capital preservation. They know that if they can protect their capital, opportunity will always come back around. The impatient trader wants to make a fortune fast. The wise trader wants to build wealth that lasts. It's the difference between playing to win once and playing to win forever. In a way, risk management is the purest expression of respect. Respect for the market, respect for money, and respect for yourself. It says, I value my longevity more than my ego. It demands maturity because it forces you to accept limitation. You can't take every trade. You can't be right all the time. You can't force the market to give you what you want. But you can decide how much of yourself you're willing to risk while pursuing it. That's why the best traders aren't defined by how much they make, but by how little they lose when they're wrong. They've turned defense into an art form. They understand that protecting the downside is what creates the upside. Risk management doesn't limit potential. It amplifies it because it ensures you'll still be here to take the next opportunity. So before you ask, how much can I make on this trade? Ask a better question. How much can I afford to lose and still play tomorrow? Because that's the mindset that builds empires quietly, while others burn out loudly. In the end, trading is not about being fearless. It's about being prepared. Patience, persistence, and progress. The quiet trilogy that defines every great trader's journey. It's not the adrenaline rush of a winning trade that creates mastery. It's the calm endurance through countless ordinary ones. Most traders crave excitement. They want every moment in the market to feel meaningful, dramatic, alive. But the truth is, trading mastery isn't exciting. It's steady. It's repetition. It's showing up day after day, learning from your mistakes, and slowly shaping your instincts through consistency and time. Your patience is the most underestimated currency in trading. Everyone talks about strategies and setups, but very few talk about waiting, truly waiting. The best traders are often the most patient observers. They don't chase every signal, they don't force opportunities, and they don't let boredom dictate their actions. They understand that trading isn't about constant activity, it's about selective precision. Every trade is like a move in chess. The goal isn't to move quickly, it's to move wisely. Patience also reveals character. When markets are slow or uncertain, the impulsive trader tries to force action. The disciplined trader waits for alignment. Waiting is uncomfortable because it exposes our desire for control. We feel like we should do something, but mastery often means doing nothing, staying calm in uncertainty, protecting capital, letting setups come to you instead of chasing them. In trading, patience isn't passive. It's powerful restraint. It's the art of not reacting, even when every part of you wants to. Then there's persistence, the fuel that keeps you moving when patience feels impossible. Because the truth is, trading will test you. You will lose. You will doubt yourself. You will question whether you're cut out for this. Persistence isn't blind optimism. It's the decision to keep learning, even when it's uncomfortable. Every loss holds a lesson, and every setback holds data. The traders who endure are the ones who see failure not as a verdict, but as feedback. Pertin means refining your craft long after the initial excitement fades. It means studying your journal, revisiting your mistakes, and finding clarity in what once felt chaotic. It's the willingness to start again, smarter, calmer, and wiser each time. The market rewards those who adapt, not those who stubbornly repeat old patterns. Persistence without reflection is just stubbornness. Persistence with learning is evolution, and that brings us to progress, the natural outcome of patience and persistence combined. Real progress in trading is subtle. It doesn't come in giant leaps. It comes in small refinements. You start to see how your emotions shift with market movement. You recognize patterns not only on the charts, but in your own behavior. You begin to trust your process more and your impulses less. The progress isn't just in your results, it's in your resilience. You stop reacting, you start responding, you stop chasing, you start attracting clarity. The journey of trading is, at its heart, a journey of self-development. It demands that you grow not just in skill, but in self-awareness. It teaches humility because no matter how good you are, the market will always be bigger. It teaches discipline because chaos rewards only those who stay calm. And it teaches patience because mastery takes time, more time than most people are willing to give. What separates a transient trader from a lasting one is the ability to embrace the process, to fall in love not with outcomes, but with improvement, to understand that progress isn't measured in profits alone, but in control, understanding, and emotional balance. The traders who rise to the top don't obsess over how far they still not have to go. They focus on getting slightly better today than they were yesterday. That's how mastery is built, quietly, consistently, persistently. There's a deeper truth hidden here. The market is a reflection of life itself, unpredictable, cyclical, constantly testing your patience and discipline. You can't control the waves, but you can learn to surf them. Each setback is an invitation to grow. Each victory is a reminder to stay humble. And each day you trade with patience and persistence, you're not just becoming a better trader, you're becoming a more grounded, self-aware individual. So when you feel stuck, when progress seems invisible, remember this: the seed doesn't grow the day it's planted, it grows the day it's ready. Your consistency, your patience, your quiet persistence are watering that growth every single day, even when you can't see it yet. The traders who win aren't the fastest, the flashiest, or even the smartest. They're the ones who never stop improving, never stop learning, and never let the noise of the moment drown out the purpose of the journey. Because in the end, the real reward of trading isn't the money, it's the mastery. The mastery of patience, of persistence, of yourself. And that mastery, once earned, doesn't just make you a better trader. It makes you unshakable.